Alrighty, welcome to another episode of the ICT 2022 Mentorship Remix. I'm not sure what episode we're on now, but let's get right into it. I know it's been a minute since I plugged one, and I'm going to talk you through the entire thought process behind this, okay? So we're going to pull up ES here. Now, my overall bias was actually incorrect, but we got very nice setup still, even with that being the case. And it's okay. It's okay to have your bias wrong, your overall thesis incorrect. That's going to happen. It happens to everybody. I don't care who you are. Doesn't matter who you are. Sometimes you're just your thesis, your bias, the overall draw where you're looking for price to go. Sometimes you're going to be incorrect. Okay. There's no way around that. It's what you do after that that matters. But what we were looking for this morning or the other morning, yesterday morning on ES here. And we'll talk about NASDAQ briefly as well. We've been ramping up, and yeah, sure, like ES and NASDAQ both are overall bullish. Completely understand that. We've been ramping up for a good while here, and we took out this higher time frame bots. I took out this higher time frame bots out here, and we recently pressed up into this higher time frame imbalance. You see that right there? That's a higher time frame daily fair value gap. That's a higher time frame point of interest, higher time frame resistance. Okay. And we had this big flush on Thursday, really big flush on Thursday that came down. And it came down, yeah, into this bullish imbalance right here, but it completely engulfed this previous candle, which in itself is a bearish signature, being that you have a higher time frame point of interest to frame it off of, and we have that higher time frame box that cleaned out. And over on NASDAQ, we had filled in that gap. So we have this thing right here. We have previous day's lows right here. That's what I'm establishing as my ultimate draw. So as you can see, like the overall, it never did take care of that. And as I was saying, that's fine. It doesn't mean you still can't capitalize. It doesn't mean you still can't get some nice setups, because just because that's like what I've established as my overall draw, my overall bias bears, doesn't mean that that's like a PT. That does not mean that that is the target. It just means it's, you know, the higher time frame draw. So I was incorrect on that, but then what we see happening here is this thing comes up into this higher time frame imbalance. You see this? Big higher time frame imbalance right here. And we have a few key points of interest. So we have our breaker right here. And we have this, you see these lows down here inside this imbalance as well. So this thing's coming up here. And it's just consistently pushing up throughout London session. So London session wasn't interesting for any type of bearish opportunity. In fact, I got a nice bullish setup. You might think, well, you just said the bias is bearish. Yep, remember what I just said? It doesn't mean like there's still not opportunities in there. Like that's my overall higher time frame thesis. I understand where I am in the bigger picture, but I need price to reflect that. I need price to reflect that it does want to move down there, and that's with a shift, right? So like I have this thing in London coming up here, and you can see it's consistently putting in higher lows, higher low, higher low, higher low. It's in a bullish trend. We can clearly see it's bullish market structure here, right? We can see that. And here's the thing, folks. Each candle tells you a story. Each candle holds information. So I actually saw a really nice setup. And yes, it's actually, I can't remember. I don't think it might not have had the imbalance. It might not have had the imbalance in there, but we'll see. We'll double check. We'll still go over it. And we had this really strong close right here. You see? And this is what I mean when I say each candle tells a story. And yes, it does connect with the ICT 2022 entry. Because when you have these specific signatures, you get higher probability shifts. So like, for example, on ES, and then we'll go into New York session after this, and we'll talk about the setup in New York too, of course. Okay, because we did have some setups in New York that had really good fall through. But with London first, this is what we had available in London. London, all you had was bullish setups. There's no bearish setup in London. Okay, and I did plug this in my chat room right here. In the free Discord chat, there'll be a link to that in the video description. Right here, we have this strong close. So I want you to notice how we aren't testing that breaker yet. We have that breaker up above serving as resistance once it comes up into it, but it hasn't tested that yet. And I want you to notice how this 1 hour candle had like a really strong close above that previous candle. There is no swing high put in yet. Whenever that first closes, it's still in that upswing. There's no level of resistance that it's trajecting off of. But then we see this happen right here. Now we do got a swing high, but Do I think, like, now that I see this swing high right here, that it's just going to turn on a dime and just sell off and take out this low? No, I was still bullish on it even after seeing this, right? Why? Well, as I just said, look at the previous candle, the previous close, strong close, and there's really no resistance that it's coming up into at this point. We did have these old lows down here, but it didn't respect it. It already cleared it. So since it already cleared it, you don't got to worry about it. This is your next level of resistance. And then you got that imbalance up there as well in the 1 hour. So I have a clear draw up above. I have this strong close right here telling me that it has more in the tank. And then after I get that strong close, and then I get that 7 o'clock close. Now we're coming to New York. What do we see? We see a swing high, but what does that also create at that same exact moment? It creates internal range liquidity down below right there. You see that? So guess what that is? That is a draw. It's still bullish. That doesn't change, but guess what? The low of that candle, there's going to be liquidity residing there. And then we got this inefficiency that it's going to want to come down into. And this is what I was saying. This is what I was saying right here. I wanted to see this thing. Let me zoom back over. I wanted to see this thing come down and trip out these sell stops. Oh, look at that, folks. It also happens to be equal lows, right? Look how that connects. You have equal lows right there. You have that swing high put in. So you have what I call the third candle draw down below. That's what I call the third candle draw. Then you have the equal lows, you have the inefficiency, but it's overall bullish. Don't forget, we have this strong close on that last six o'clock candle. Don't forget, because it had a strong close above that previous 1 hour candle and it's still in that upswing, it's going to gravitate to take care of that high. But now it has to swing high. Now it's the inefficiency. Now guess what? There's your 15-minute sell side. As you know, ICT is taught, look for that sweep in the 2022 mentorship. There's your sweep right there. It takes care of it. You see, because what it did here was it had that little leg up right there. If you look at my cursor, what did that do right there? That was creating sell side beneath this low. And what does it do? It takes that sell side beneath that low, aka our third candle draw, before it takes out this. But don't forget, we still got that strong 1 hour close right there. That liquidity was never taken. It's still there. It's still valid. It is still bullish. It is going to want to take it, but it just wanted to sweep these sell stops, that third candle draw, the inefficiency before it took care of that. It goes back to the old saying, my old saying, wait for liquidity or you'll be the liquidity. That's how you wait for the liquidity. It creates that liquidity so it can take it. There's your opportunity. And then, of course, at that point, you can go down to the lower time frame and then look for an entry. Just so you know, I'm not talking in hindsight. I'm not just going in and, hindsight charts or market replay like most people on YouTube do. We have a chart right here, 100% transparency, time stamped right there, 8:30. Now, this is in the mentorship chat, but I plugged it in the free one as well. So the free one, as I said, I have a futures analysis section. I haven't been that active in there really at all, but I'm going to start being more active in there and plugging my futures charts as well. I always plug it in my mentorship chat in this section, but I'll start plugging some more charts in there for the free chat as well, right? Because I want all y'all to get some game. I want all y'all to get some education. I want to provide the best educational experience possible. So I want to help out everybody and give everybody a little bit of something, okay? So you can see right here, I plugged this. I said, there's that sweep, because that's what we were looking for. You see? Now let's see if we get a reaction and look for that high to get taken. And then you can see right there as well. That's what I was saying. Look, ES looking for it to run out that high. Would like to see it come down into that 1 hour fair value gap. Guess what? Third candle draw, imbalance down there. Sell side created. Sweep that sell side preferably, but it's drawn to that high up there. Because remember, we had that strong close. And it never took it. It moved lower without taking out the high. Remember, that had a strong close above the previous 1 hour candle, and now you just got this inefficiency. You got the sell side starting to support. So we want to see that. We want to see that shift, and we want to see that leg up. Okay, so it sweeps it right there. Go to your 1 minute. Now, I don't believe we got the imbalance. You might be thinking, we don't get the imbalance, and that's not ICT 2022, Mike. I get it, but it's the thought process, because if it did, I still liked it. I was still bullish on it personally. I figured it was like a no-brainer that thing wanted to push up. But it is London session, so London session is going to be a little bit more lethargic, a little bit weaker. It did give it a little bit later right there, but it gave the pullback right here, as you can see. So you see how it came down right there. It swept that sell side, and I can't remember if NASDAQ gave this similar scenario as well. I was more focused on ES right there because that was the first one I saw. But you can see, like right there, we come down, we get our shift right there on that push up, and then with a little pullback, and it seeks the opposing buy set up above right there. So hey, nice little few points. All right, a few points a day keeps the day job away. That's all you need, right? So That's what we got right there, folks, on that London deal. But I want to talk about New York, of course, because we got some opportunities in New York too. That was pretty clean. So with New York, now remember, I still got that overall bias, but I'm still able to navigate that trend. That's the thing. I still got the overall bias. And then what happens is this thing's coming up here. It's coming up here into New York. And like I got this thing, it ends up running out these highs, of course. And then we end up having what right here into 930 after running out these highs. A pullback. Now, pay close attention. I want to remind you that this thing never did come up into that breaker right there. It never did come up into that breaker. Notice that level of resistance. Oh, look, we got buy side right here too. It never took care of that. So you see that. Notice that. But at the same time, understand that this is still bullish market structure. So we were looking at this. Me and my mentees were looking at this push lower right here on Friday, and we were not convinced that it did want to move lower. Why? It's bullish market structure. Look at the chart, folks. Look at the chart. You got that imbalance. You got the sell side taken. Look how it came down right there. It swept that sell side, and then it closed back up above it. Each candle tells a story. Each candle holds information. That is not a shift. That's a bullish market structure still. And then we have a time element. What's that time element? Well, 9:30, as we understand, is a key time for turtle soups, for fake runs. Many times, as we see day in, day out, many times the first run at 9:30 is a fake run. Not 100% of the time, but the vast majority of the time. And what we see happen here is, look at the structure. Look at the structure and look at the first move. It comes down, cleans out, sell side, rebounds that price action. First things first. First things first, it does that. Okay? So then I already know what I'm looking for here at this point. I already know what I'm looking for. Is I'm looking for that shift now. Because guess what? I got that sweep. You see? I got that sweep. Oh, look right there, folks. There's your classic ICT 2022 mentorship in play. Look, sweeps the low, 15-minute sell side taken, and then you get a displacement. Look, you get that imbalance. You get another imbalance down beneath that as well. Look, right there. Boom. Oh, look, we got another one right here. Boom. Look. Fair value gap, and you actually didn't get the strong close till a little bit later. That's what I like to see. I like to see a strong look right there. There's your strong close above these short-term highs. You see that? You see those highs? Look at that close above it, and then it pulls back, and then we got there's your entry right there. Take your Fibonacci. Take your Fibonacci from that low to that high. You get our discount. You get your, looks like OTE as well, or maybe this might have been just job OTE, but you got your discount. Comes down to that imbalance. And as I was saying, you could target out this buy side right here. And well, that really would have been your best bet because we had Powell speaking at 10 o'clock. So there's, I don't believe there's anything wrong with taking trades before news as long as you're out before the high impact news is done with. But as I was saying, this is a good objective to shoot for. Just run out that high, like a low hanging objective. But if there was no news, and you could look for it to run out these highs up here as well. You see what I mean? Because the trend's still bullish. If the trend's still bullish, you're able to shoot for objectives like that. And you could get a really good risk reward like that, of course, as well. And that's, think if you wait for a discount and OTE and then you shoot for these bigger levels up here, what's available to you. You see what I mean? I'll be right back. All right, where did I leave off at? So we had our shift, right? We came down, we cleaned out this 15-minute sell side, we had our bullish shift, and then we ended up seeking that opposing buy, or with the help of news, of course, right? Now, what happens after news? Well, like Powell speaking, right? And then which caused this big push up. It's still bullish market structure when it's first pushing up here. All right. It ain't showing any indication of weakness off at first it didn't, of course. Like we came up and we completely rebalanced, I believe, that 4 hour, if I recall correctly. Yeah, we completely rebalanced the 4 hour price action. So of course that's going to be resistance. And then we got the order block up there too, that it's coming up and it's testing right there. So then we were hunting for a shift, of course, after he was done speaking and all that stuff. So we end up getting our shift right here. You see? We end up getting that fair value gap. We get the strong closing to short-term low. Take your Fibonacci from high to low. You risk that high. Look for your premium. There you go. OTE. It almost took care of it, but it didn't. It stayed within it. And then we ended up getting that. That's what we were looking for. That's what we were talking about on Mike. We were looking for this thing to roll over and attack this, and then it attacked low prior to the news as well, which we figured would be the case. So you can see like what you can milk off though, with, in regards to, I'm not saying you got to get big risk reward. I like low hanging objectives. You guys know me. You can absolutely get fucking rich with a 1-to-1. So don't let anybody tell you otherwise, but it is available if you want bigger winners, right? You just got to understand where the ultimate draw is. So that's the setup that we had. So we had a few setups. As you can see, we had that London, or actually not, it wasn't a London deal. I think I said it was a London deal. It wasn't. London was just consistently gradually pushing up, but that was like right at the beginning of New York that we had that first setup that I was talking about. Then we had the setup right there, and then we had the setup right there. So look what's available to you, right? Now, NASDAQ actually had just to kind of talk about that New York deal on this. Like, we had the same deal earlier on, right? We had that lower time frame shift and push up. I liked ES better, though, because it was showing more respect for that 15-minute sell side. But after we got the news and all that stuff to happen, now, actually, the timing, I did have incorrect on this. And guess what? I have no shame in saying that. A lot of folks, they can't say that because they want to sell their course. They want to sell their mentorship. They want to act like they're some god, and they're not. All right? Everybody times it wrong sometimes. I don't care who you are. Any person that you can think of, any trader you can think of, times it wrong. Has it incorrect sometimes. That's fine. It's what you do after that. Because guess what I did after this? You know what I did? What I told the folks in my mentorship chat? Look, right here. Couldn't do it the first time, but don't sleep on it. New displacement here, meaning a new shift in market structure, okay? Because they didn't do it that first displacement like ES did. ES actually followed through after we had that. But then it comes back up, runs up the high, no problem. Look, the thesis hasn't changed on it. I know that things, it's just, it's about to get clobbered. I could see that right away. Right? I could see that right away because of the higher time frame resistance that we've already established on this thing. And then now we have the influence by news. And we understand many times news is used as a form of manipulation. So I understand it's going to be giving up these lows here soon down here. That's toast. It's just timing it. So if it can't do it the first time, well, look, fair value gap right there. Look, strong close beneath the lows. I have a new shift at my disposal right there. Right there. So guess what? Another opportunity. You may not got the first one. You took an L. Who cares? Who gives a solitary shit if you take an L? Guess what? That's what you sign up for as a trader. Everybody wants perfection. Everybody wants 100% win rate. It don't exist. Sorry, I got to be the one to break it to you. Sorry, I got to be the one to be the bearer of bad news. But it doesn't exist. You're going to be incorrect. But guess what? If you can stay level-headed and you can keep fucking executing, guess what? Boom, there it goes. Look at that thing. Look at that thing take off, right? Cleans out those lows, just perfection. And that's what it's all about, folks. And that's where psychology comes into play. But I don't want to get too deep. I don't want to make this video too long because, people tend to tune out of it. But that's where psychology comes into play, right? Because you're going to be incorrect. It's what you do after that that matters. You know what a lot of traders do after they're incorrect, even if it's just one or a couple losses, few losses in a row, they'll go back to binge watching video, looking for a new strategy, looking for a new way of doing things because they can't accept being wrong because their ego is more important than making money. And then they'll deny it all day and say, I just need more info. I just need a better understanding. And for some people, that might be the case. I mean, for a lot of people, actually, like they don't know what they're doing on the chart as well. But then once you have a strategy, you have a system, you know what you're doing, you have clear rules, you have back tested data that tells you that it works, then why are you being upset over a loss? If you have all that stuff that I just named off, then why would you be upset over timing it wrong? Who cares? You enter again, just like that, you make it back and you keep executing. But you can only do that if you have your psychology on point, because otherwise, you know what happens? You just become fearful. Because you were incorrect. You took a hit to your ego, right? Now you're incorrect. Now you get hesitant. And guess what? The one that you're hesitant on is the one that does it. Now, that's just 100% facts. The one you're hesitant on is the one that makes up for it. That's how it goes. That's just how it goes, folks. So you got to get your psychology to the point where you're able to execute, and it doesn't phase you. And then you come out on top. That's how it goes, right? But yeah, folks, I hope you enjoyed this little breakdown. If you did, leave a like, subscribe. I'll catch you later.